Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Wednesday, February 14th. Nothing of any importance as far as market data coming out from the Fed. Tomorrow, most important is the initial jobless claims. There's a lot of other reports coming out tomorrow, and so things could get frothy. These other indicators are not as interesting or influential on markets as other ones. Initial jobless claims is really the biggest one of tomorrow, but we're all really preparing for the much bigger report on Friday, of course, all the PPI data, which is Producer Price Index, how much it costs for companies to pay for their raw materials, basically. And we have the regular PPI, core PPI, year over year, and core PPI year over year. On to the charts. S&P 500, as you can see up here, closed just over 5,000, that psychological mark, which can give a little bit of strength to this market. However, all the other major indicators that I like to look at are showing perhaps a little bit more weakness coming up. In particular, the VIX, the fear gauge, which really tracks the people that are really the biggest gamblers on, where things are headed. That's what the VIX really represents. It represents where options contracts are. We had this candle here is an inside day from yesterday's larger green candle and this upward move here. And so what this means is that most likely the VIX will continue higher tomorrow, which would mean that the S&P 500 is destined, using our crystal ball, of course, to go a bit lower. Additionally, to add to the pressure of potential more sell-off in the markets tomorrow is the 30-year Treasury yield. We dropped off a little bit today, but that does not look like bearish. It looks like a healthy little break that is more likely looking like it's going to continue higher. We had this little trend here, broke right through it yesterday, as I've been saying for a while. We have this head, shoulder pattern, and it broke yesterday. And this is just looking like it wants to just keep going up. Similarly, in the TNX, again, in a little inside, we can count this as an inside day after a bullish move in the 10-year yield, and I am expecting this yield to continue higher. One other market I've been meaning to bring up that I haven't brought up yet is the silver market, in particular junior silver miners. The reason that I really like junior silver miners is it can add leveraged exposure to the silver market. And so if you want to meddle in precious metals, if you want to meddle in precious metals, if you want to get exposure to metals, this is, it has less downside than an actual leveraged fund. It's these are companies that will have a much higher perceived value as silver prices go up, equally as they go down. And so it's a safer way to get like maximum amount of leverage for the upside with a minimum amount of relative risk, is kind of the way I see it. And so this chart, is very interesting. The past 2 days, we've actually hit this $8, basically $8 exactly. And as you can see from this line, we've hit this same level of support 1, 2, 3 times previously, and before that, we haven't seen that price since 2020. The COVID dip. And so if there's any market that's at a potential bottom, if stocks are and people are willing to look for things to invest, maybe spread out their investment, maybe, take some gains from Nvidia and all these tech companies and put it somewhere else while the whole market may be continuing to rise. I think this is a great potential opportunity here in this particular fund, junior silver miners. Interestingly, when we actually look at the actual price of silver, we have a little bit of a different story. We see trend lines forming here, but they're not flat. The silver miners are at the same price that they were, so there's a little bit of a divergence here, right? So we have silver actually showing strength relative to the value of these junior miners that are just hitting the same bottom point. And so the way I kind of see it is, as long as silver doesn't collapse, it almost looks like the silver juniors will naturally be lifted to this price. And of course, if we get any kind of silver breakout, then that could be very bullish for junior silver miners as well. Taking a longer look at silver, this is a very nice, interesting market to be looking at. It's nice to take a look at where price has been before. We still have never in silver gotten to the highs of where silver was in 2011, and similarly, it's not just that one high there. For the next whole year, 2012, they stayed pretty elevated, and we haven't seen price like this for a very long time. Very, very long time. I mean, this is more than 10 years ago, and now silver is worth less than it was that long ago. I mean, I don't know. This is one of these kinds of markets that, chart-wise, crystal ball-wise, however you want to look at it, if you see this as a longer-term wedge pattern, Graham might even suggest this is one of these markets that has been ignored for a long time and, is ready for its big heyday. And, if we were to see a similar move from the, 2008 through 2011, we could blow this top here in 2011 right out of the water. What's stopping us from getting to $90 in silver? Certainly gold has been on a, we're at all-time highs in gold, and no one cares about silver still. It's one of the more interesting markets to be looking at right now. That's all I have for you today. Thank you so much for watching. Robschild.